You're listening to the Real Estate Runway podcast powered by QUATTRO Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, folks, I've got a great episode for you today. So I'm bringing on my friend Angel Gonzalez with Keystone Private Capital Partners. And so he is managing partner of the group. He and his partner, John, they are doing some really interesting stuff in the multi-tenant industrial space. So I learned a ton on the show today, and I'm just giddy about it because I don't always get to learn on these episodes. But I didn't know near as much about this space, and it's taking the world by storm right now. So it's a super interesting way to invest in the square footage space of real estate and really spread your risk out, not just having one big tenant. So let's get right into the show. And before we do, if you get any value out of this episode or any other, pay it forward. The only way people find this show is with your comments, your 5-star review, your like and subscribe on YouTube. So wherever you're listening to this, take a moment while you're listening, write us that review, a little 1 or 2 lines and a 5-star review or subscribe. That's how we get to more people just like you. So pay it forward. Folks, if you want to be on the show, I would love to have you. Reach out at thequattroway.com/podcast to apply, and my team will assist you. Love to have you on. I love these conversations. And if you want to reach out, just send us an email, podcast@thequattroway.com. Now, remember, we are on all the social medias, even TikTok today, at Real Estate Runway Podcast on TikTok, and all of our Quattro channels on LinkedIn, Facebook, Instagram, Twitter. Team QUATTRO Capital, one word, no special characters. So let's get right into the episode and let's get into it. Here we go. All right. Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton. We are powered by QUATTRO Capital right here behind my head if you're watching on YouTube. And I've got a very special friend with me on the show today. Last time we saw each other, Angel, I guess, was back in Miami at the Fund Launch Conference 2023. So great to have you on the show. We were joking about doing this show, and I'm glad we finally brought it to fruition. Angel, welcome to the show. How you doing, brother?
Hey, man. Chad, thank you so much for having me. You're right. There was the origin of this is at the Fund Launch Live event. So I'm really glad that you...
Yeah. And there may or may not have been drinks in process of that planning, but I assure you we're sober today and we're going to make a great episode for all you listeners. So good to have you here.
We're supposed to have one?
Yeah. You see this little glass of wine down there? So Angel, before we get into the meat of the episode today, which is really going to be where you guys are experts in the multi-tenant industrial space, let's talk about you a little bit. Tell me about you. Tell me about Keystone Private Capital. Let's go into your background a little bit. I know you're a military man as well. So let's touch all that stuff that makes you who you are today, and then we'll get into the meat of the episode.
No, absolutely. Appreciate the opportunity. Yeah. So a little bit about my background. People, you kind of all start out with the dream. My dream started out actually very early because I'm originally from Panama. And so it's kind of one of those situations where I did have the opportunity where my family brought me to the United States, Minnesota primarily. And then it was a journey kind of began from there where I just started to figure out like, how can I just become part of the community of the USA in a active member? And so from there, I just went ahead and as I was going to college, right before that, I actually had someone talk to me about joining the Army. And so it was one of those situations where I was like, I know I grew up with a family that's served. Quite a few men have served in my family. And it was part of our fabric of what we believe that's just, like I said, being part of a community. And then it was those situations that I went ahead, I joined up. Mom wasn't thrilled, but I made that happen anyway. And it turned out to be one of the best things I ever did for myself in my career, because I think between being in the military and then also then being in college, you kind of have a level of what I like to at least look at and think about is you're very strategically always thinking about the next move, and you have a level of just discipline that a lot of people I felt that at the same age didn't have. And that led me right into kind of being prepared to just go right into the financial sector. So right out of the college, still serving in the military on the side there, I went ahead and joined a financial institution. So I was in banking for about 10 years, anywhere from being a banker to a mortgage banker, all the way to a branch manager, and then got to the point where I oversaw all consumer banking for a pretty large institution nationally. And that was where I thought I hit the peak of where you kind of land. And I'm like, all right, so I'm young, I'm in my 20s still, and I peak. But actually that wasn't the case. Where I really led me to that opportunity was starting to look at I started talking to people about investments, different things, and that led me to single family homes. So then I started buying single family homes and kind of working on them, flipping them on the side. And out of nowhere, I had an opportunity to become a finance director for one of the larger automotive firms in the Midwest. And I was like, hey, an opportunity to understand, okay, how do I take my financial background, play with some cool toys at the same time? And that was a cool experience, which then that kind of transitioned me into becoming a general manager and overseeing one of the largest products out there in the market. I'm a Jeep guy, so I don't want to talk too much about it, but I'm biased. And so then I did that for a while. And that opportunity actually really changed everything because it made me go from thinking, and I don't want to knock anyone that's in single family homes, but it was one of those things where it's like, why am I thinking not bigger? And so I had a really good mentor of mine by the name of Mike Sowers that really was like, hey, have you thought about commercial real estate? You already done real estate on the side. You've been a pretty successful executive in your own rights. What would that look like? And so I took a little bit of coaching, probably about a year and a half or two of work. And then finally I made the transition and I've now been in commercial real estate for the last several years now, fully active in that. And then it was another realization that I made in my journey that it was like, hey, we were very heavy in the office buildings and it was an opportunity. Then I started seeing the climate. Obviously, we all went through a very unique time in our country with COVID and things like that. And it just opened up my eyes to, hey, what exactly how can I help? How can I just do a little small piece for my end and be a part of the solution? And that's what led me to industrial. It's kind of been this sequence of events because I never thought that some of the supply chain problems I had when I was a general manager between chip shortage, having vehicles on ports, things like that, I never thought about how could I be on the other end of it? And then now being on the other end of it, I'm like, okay, this is all different. I can be part of not only growing some wealth for my investors and myself and my family and things like that, but more importantly, it's like, how can I also be part of the supply chain problem and be trying to help there? And that's been my journey.
Yeah, that's fantastic. And I would have said the word, just like you said it, discipline. Coming out of the military, you have a different level of discipline. And then, of course, you attended college and did all that great stuff. Holy smokes, man. You've had the ability to learn how money works. You've had the ability to manage at a very high level in large enterprises. And then the wherewithal to say, I think I've got more to contribute to this world. I'm going to go and actually run some large commercial real estate projects and, of course, take on the fiduciary responsibility of that capital and make it happen. So kudos, brother. I love that. So if you were to kind of transition into how we're going to talk about the multi-tenant industrial space, why did y'all at Keystone Private Capital, why did you pick that vertical? And then tell us about it a little bit. It's a really new product in the space, I think. And it's taking the industrial world by storm. So let's talk about what it is, why we care, all that stuff that attracted you to it.
Yeah. So I think the first part about that, what you start figuring out when you're looking at different sector and asset classes that people can be in, we always try to figure out, okay, what's the most stable? So a lot of people that I'm friends with and people like yourself, they're multifamily, very big into it. Obviously, we all need our shelters and roofs over our heads. And so that's really important. And so then when you start looking at other asset classes, then you start figuring out, okay, what's the next more surefire thing that what we need? And one of the things that's it's funny, when I first started in commercial, I thought it was going to be, obviously everyone needs to office out of somewhere. So initially I thought maybe that would be the sector that was going to be the next most needed sector. And I was completely wrong. As we kept researching, kept understanding things that are happening, what we found is that every business needs a home, but most goods have to go somehow from one place to another. At some point, it has to get from A to B. And so as I started thinking about that, I started thinking, okay, how can that impact the way that we look at the business? And so when we started really digging into it, we started figuring out, and one of the things that I'll get into a little bit is that you're hearing a lot of like coin phrases right now. You're hearing people talk about reshoring, onshoring, nearshoring. And a lot of times people are like, wait, what's all these little things that people are talking about? And as I break those down a little bit, I would say that what you find when you do industrial is that Amazon, companies like Walmart, all these different companies, goods that we're getting to our grocery stores, the way they move, there's a science behind it. Logistics matters, supplies matter. And so we at Keystone Private Capital decided that we can't be problem solvers to everything when it comes to supply chain, but we can do a little small part. So we decided to focus very heavily on a very specific corridor of the nation, which is the I-25 component coming from Mexico up through Wyoming and so forth. And the reason we decided to do that is because we knew that these things that we are talking about are really impacting our country. And then it's the political climate, right? You start hearing that over the next 10 years, what can we do to start taking all the goods that are all on other people's nations? How can we bring that back? How can we get our borders a little bit more sure up? And it's not only about goods, it's also about some type of national security in some aspects. And that's what you're hearing a lot about. And so that's what kind of piqued our interest. We started doing the research into it, and now we fell in love. We fell in love with a couple of things with the multi-tenant sector. One of the fact is that we find that the tenants tend to be very long-term tenants. What people find in other sectors, that tenants are staying there less than 3 years, up to 3 years. In this sector, we have tenants that are going to be anywhere from 5 to 20 years. Then we also get to understand that we're starting to deal with businesses that have been around forever. Actually, today, just before I got on here, we're looking at a project which is one of the largest honey distributors in the country. And this business has been around for 100 years. So imagine now taking that responsibility of being like, hey, if this is a project that we're going to be stewards of, how do we make sure that this company that's been around for 100 years, how can we be good partners to them so that they can continue to produce and deliver at a high level? So it's really about those components that led us into there. And then I will say that then subsequently, now we'll have to explain that reshoring, for those that aren't aware, that means bringing back manufacturing to our country. So that's going to be a really important part. And they did say that our political leaders and things that they would like to do that within a 10-year time frame. Then you also are going to hear about the onshoring part. And that's like when you're talking about moving brand and production from one part and factories into another. And so that's one of the things that's been happening there. And then nearshoring is basically just moving production. You're moving production into factories into certain regions of the world and things like that. So there are all these different phrases. Ultimately, what we're saying is, how can we bring this stuff back to America? And that's where I decided that I'm like, not only can I do something cool, I'm a military man. When you're talking about how can I make my country like just stronger or be any part of that in any way, I'm like, I eat that up. And so that's what's driven my passion towards that. So
I love that explanation. And macroeconomically, folks, we are, and this is not a political thing one way or the other. It's the fact is we are becoming more of a nationalist society. The world is becoming that way. And it's accelerated in the last 3 or 4 years, mainly because we figured out what can happen when you are fully dependent on, overseas manufacturing and your supply chain gets turned off for the first time since Noah's Ark. It's a big deal. It's also a dangerous world out there right now. There's a lot of tensions politically. And so you just can't be dependent on other countries for everything that you have, especially not military technology. If you're getting that from China, that could be a problem. So interesting. So I love where you went with this. And so macroeconomically, you've shown that, the need for space is increasing. Just like we talk about in multifamily, the need for housing, we have underbuilt and we're still, as of today, 1 million rental units short and closing fast and 3 million homes short. Both of those make rental housing a scarcity problem. We're having the same problem developing in the industrial square footage based space. So let's talk about, Angel, the product a little bit. Let's just talk about the different industrial product types for a second and then hone in for me on what it is when you say multi-tenant, what that means and why that product developed.
Oh, perfect. So when you talk industrial, a lot of times, and one of the things I always talk is a little bit easiest is that when you drive up and down highways, that's probably where you're most likely to see industrial. And there's a reason for that, right? Because you need access of ease so that you can move goods all over the country. So what you're going to find is a lot of times when you're driving down facilities, you're going to see just big box, big squared buildings. A lot of times you might not even know what's inside of them. They're just, a lot of them are white, big buildings, or just usually they're going to be all one level. So that's going to be one of the big giveaways. It's going to be really big clear heights and one level type of buildings. And then you're going to start seeing that you get into the factories. And then you start seeing that then those factories also lead into people having to need more space, or they call it overflow, that's going to lead into your yards. And your yards are going to be more so when you're looking at it from that standpoint and driving by. There's going to be your big, wide open lands, usually surrounded by fencing, a lot of LED, a lot of lighting involved in that. And then that's where you're going to see a lot of semis, equipment, storage, things like that. So there's going to be a lot of different types of industrials that you're going to see throughout all over the nation. But the one that we typically love and tend to focus on is the multi-tenant, more of that 50 to 100,000 square foot buildings that are all, as much like I said, single level, And we do have an ideal clear height that we're looking for. And the reason, if, for those that listen, why clear height matters is because you're basically trying to understand if you're able to either work with pallets inside of different things or basically getting in truckings to come in and out of very specific areas. And quite frankly, you also have to think about direction. That was something that was one that thing that threw me off a little bit was the fact that direction of where the properties are located matter for how trucks drivers drive in and out. And that has a huge impact, left versus a right. It's things like that we started to learn as we started digging into this. But then ultimately why multi-tenant is because what you're going to find when you do a single tenant, not only do you have one big company that then needs all this space, their needs change. You're at the mercy of that organization and what's happening with your future of your property and your investment. What we found is that with multi-tenant, you're going to have the ability to have anywhere from, usually a lot of the multi-tenants that we're seeing is somewhere between 3 to 5 different businesses within one big space. And that's going to be divided depending on some businesses only need loading docks. Other businesses are going to need they're going to need a little bit more opportunity and ability to move bigger trucks and things like that. So infrastructure matters. But it is definitely something that we really like when we're able to break up the use of a building multiple different ways in order to really maximize not only the need for our tenants, but also the need for our investors, because the more we can have multiple in there, it also de-risks the asset a little bit. It allows that if one person moves out or doesn't pay or anything like that, you're still able to leverage and continue to keep flowing with your business while you're finding that other tenant. But again, the other thing too, that's really nice. So when you're looking at it from a more of a proportion level, what the needs might be, what you're going to find is that a lot of times that if you actually really get the right alignment of people in those spaces, they also can be part of, it's kind of like creating a unique ecosystem where they work within each other as well. Where we have seen where all of a sudden you might see a packaging company over here, but this person over here might be the perfect resource for them to be able, like I actually have one where you have packaging on one side and you have tent sales on the other. These major tents need us to get out and they kind of symbiotically use each other. So these are the kind of things that's nice when you have multi-tenants that are kind of in those spaces.
Yeah, that makes a lot of sense. And so let's talk about, and so maybe back up. When you say multi-tenant, you're really just talking, it's just a big industrial building, but it's sectioned off. It's partitioned off into little more bite-sized square footage. Cool. And so you mentioned they might need more or less space. So you might have one tenant who takes over 3 slots, and then maybe they need to downsize to 2 or increase to 4. Is that kind of the idea?
That's exactly it. Yep, you're correct on that standpoint.
Okay, very good. And so let's talk about the investment thesis a little bit, right? So you're actively aggregating capital and going and putting these projects together, and then, I don't know, ultimately selling them or refinancing them or something. So what is a business plan if one wanted to operate in this space? And what is Keystone Private Capital doing with these buildings?
So the one thing that you have to know is that if you're going to get an industrial, these tends to be typically a longer hold type of investments. So our investment for people that invest with us, typically they're more in that 5 to 10 year investment kind of timeline when it comes to why they're investing in these type of infrastructure. The other thing too for us, like it really matters where it's located, and then how can we really be able to really maximize logistics. So for us, I know that we're not the sexy person when it comes to, hey, we got this little shiny object, but we really care about logistics. And logistics matters a lot because ease of movement and how things are happening between ports, between the manufacturing or these industrial buildings, and then the end user, that really, it has a high impact. When you got a hold times or anything like that, you can really disrupt. We actually had a witness an opportunity where we knew that there was an accident happen. All of a sudden, there was all these trucks that were able to basically move. The end user now has delays, different things like that, so that they got to deal with. So at the end of the day, we decided that logistics was going to be one of the main things that we look at is, can we be very pliable with our businesses and things like that? And the other component is, okay, now that we know we're going to be holding for longer terms, what kind of partners can we be with the business owners? Because these business owners are really in concert with you because you really are trying to help them maximize their ability to function. And so when we think about, okay, how do we find the right project for us? We are thinking about the size of the project, thinking about making sure that there's enough power. Power is something that a lot of people underestimate. We also think about obviously the logistic component of it. And then we're thinking about, okay, now that we uncovered a lot of the needs and what's happening here within the tenant needs and things like that, then it's about how can we make their business better? Are we giving them enough access to opportunities where they can really maximize, or if they need to grow or less or whatever that may be? You got to be active participants, constantly dialogue on communication. And so that's one of the things is that you almost go in multiple partnerships every time you pick up these buildings because you're very active in those.
Yeah, very interesting. So when you say these are 5 to 10 year investments, so when you raise the money and you say, okay, I need this much money for a project, kind of walk me through what an investor can expect through the life cycle. What is the life cycle of the project through development, through lease up, through operation? How does all that work?
Yeah. So what you're going to find is from the very beginning, before we take on a project, we do very heavy due diligence. Underwriting and due diligence really matters again, because we're trying to uncover the logistics of things. And we also try to make sure it makes sense for all parties that are going to be involved. Once someone invests with us, what they can expect is typically for us, we think about projects like within a 1 year timeline of getting them up and running fully. So we come in, we renovate within the first 9 months. We try to make sure we also lease these up within that time period. So 12 months is when we start getting to the longer side of getting these things renovated and leased up. So that's the strategy, is how fast can we get to that part in year one? Once year one kind of passes by, then at that point, what our investors can expect is right off the bat, you're going to get quarterly distributions. You're going to start being able to see that movement happen. And then from there, usually about 3 years to 5 years in, somewhere in that timeline, we have an event that usually takes place. There's usually going to be some type of a refinance that might take place, or we might sell that project at that point. And then from there, it's just a matter of going back to our investors and understanding what their end objective was as to why they invested with us. What we are finding is that some of our investors are just telling us to keep rolling forward. They just want to keep being not only investing, but what we are finding is like our investors are starting to feel like they're putting on like their warrior like armor on, because they're part of the solution in some way. So it's kind of funny. I actually had a guy say, yeah, I want to invest. I want to save the country. And I'm like, okay, calm down. You got a little aggressive there, buddy. But I do like the fact that our investors are taking it very seriously. Like they are not just in it for themselves, that they also are helping in another way. And then at the end of the day, once we get through the whole full investment cycle, whether the investors want to pull out or move into the next project, we kind of reassess everything and we do the project all over.
Yeah, that's an incredible thesis. And it's super interesting that I really had no idea there was a market for this, that businesses were tending. And remind me, when you build so what is one, I guess the term is unit, but of your building, what square footage size would one unit be? Just give us a range there.
Yeah, typically what you're going to find is that we call it the sexy type of square footage, is going to be somewhere between 3,000 and 10,000 for the smaller user.
Yeah.
And then when you are talking a little bit bigger footprints, that's when you start seeing people get into that 25,000 square, 10 to 25 zone. But most people are going to be underneath that 10,000 square foot of the need, because there's a lot you can do in that type of spacing.
Yeah. And so the kind just speak to the kind of tenants. I keep wanting to say residents because I train myself not to say tenants in the multifamily world. But the type of tenants that you're looking for or that are attracted to this space are what sort of?
Yeah, you're going to see anything from electricians to plumbers to, you're also going to see, the ones I looked at today, you're going to see honey manufacturers. You're going to see people that, and it's also funny is that it's usually not someone that makes that something big that you see. For example, we have one that we talked about where it's just a little piece of what they need in a vehicle. And it's just a small, tiny piece that they manufactured and just really homed in on. And what they found is that, hey, you know what? We can mass produce one little thing and we'll do it really well. That's what we want to focus on. A lot of it's going to be and what tends to happen, it becomes generational. So once people get in it, you start figuring out that in industrial, a lot of times you're not dealing with just the first or second iteration. Sometimes you can mean the third to fifth generation of people that have been doing it and running these businesses. And so it's really going to be anyone who wants to make something or build something. Those are the kind of people that we're looking to serve, especially in your local community.
Such a super interesting asset class. And folks, what you don't know is I'm actually sitting here interviewing Angel for a potential investment of our fund. So it's fun to let you listen to that. And these are the questions I would ask before I'm putting money into an operator and a developer. So this is a super cool project. I think there's the data, as you have mentioned, is really showing that this is where business is wanting to go. More efficient, maybe a little office in the front, some storage in the back. Think e-commerce as well. E-commerce needs this kind of stuff with a storefront. So it's super interesting. Because I'm not an expert in the space, I'm going to ask one more question before we go to the QUATTRO questions. what questions am I not asking that I should be asking about this asset class? Are there any risks? Are there any points that I've neglected to touch on that make it great that you feel we should touch on before we go?
No, absolutely. I think one of the main things when you look at this asset class, you got to ask yourself, whatever that firm is that's in this asset class, what are they trying to solve for? What are they trying to solve for? And what's the benefit of the end game that they're really, because one of the things, so the last part, I know that we talked about reshoring, onshoring. There is a thing called best shoring. And that sounds really weird.
Best shoring, BEST?
Yeah, it's called best shoring. Yes. Okay. And what it is basically what's the benefit of your company or the companies that you're serving? So at the end of the day is there a true benefit to what's happening? Now, from a risk standpoint, I do want to make sure you're aware is that when you are doing in industrial, the more tenants you have, a lot of things you're de-risking it substantially. Where you really run into some heavier risk is when you do have a one tenant, like there's a 400,000 square foot facility that has one tenant in it. Those kind of facilities are the ones that we stay away from. It doesn't meet a lot of what we're looking to do and the people we're looking to serve. We're not trying to serve just one major conglomerate out there. We're really trying to serve the people that you live next to, the guys that are right down the street that just need help trying to get their business to another level. So that's one thing I would throw out there is that there is a best shoring, and that is what is the key benefit that we're bringing.
Yeah. And folks, just to stack on that, think about, so one reason we love multifamily is on a 250 unit building, I have 250 little bitty income streams that turn over about every 2 years and they have 1 year leases, right? So there's a lot, it takes a lot for me to really lose occupancy. Then you flip that to the 400,000 square foot single tenant industrial that we're talking about. And folks, just think about a Walmart, right? It's a super specialized tenant in that building. And if for some reason that tenant they can be great, they're low maintenance, you're basically just the bank. But if they have to break that lease or they go out of business, who went out of business recently? Was it Office Depot or some large group like that? Now all those single tenant spaces that were highly customized are vacant. And that can take a long time to fill that spot, as in years. There's a 250,000 square foot building off of Interstate 40 that I've driven by for years, and it's had a big lease sign on it since I was in college, which is a long time ago. So I don't know how that guy's making money. But anyway, he's not. Yeah. And so what Angel's talking about is, look, give me an average number in a multi-tenant building you're building with 4,000 to 10,000 square feet. How many units is that typically?
So if you're talking 4,000 to 10,000 square feet units, you're talking about 3 tenants or so. Right.
Okay.
Right.
So now you have 3 income streams, but the benefit of the low maintenance, low turnover, and low operational overhead of a multi-tenant building. So super interesting. Good deal, Angel. Let's go over to the Quattro questions real quick. Are you ready?
I'm ready.
All right. Question number 1. What is your superpower in this space? Could be life or business, and how does it benefit you?
I think my superpower is connecting with people. I think that in this space, especially when you have to be such a good communicator, because you're really trying to identify the need and how you best serve. And so it's one of those things where for me, I think that's the one that I can hit out of the park where I'm just like, you know what? I'm going to get in there. I'm going to figure it out. I'm going to talk. I'll know anything about a person because people really matter to me. And I think they understand it's genuine and it really helps me in this business.
Man, you hit on one of our 4 core pillars. The first one is people, even before property and profits. So moving on to the second question, I'm going to mix it up a little bit because I just did that with the core pillars. One of our 4 pillars is philanthropy, people, property, profit, and then philanthropy, coming back and taking care of people. So it's a big circular thing. I love to give my my guests a chance to mention their philanthropic heart because you never know. We've actually had reports of people giving to these charities in the comments and such. Who would that be? Or what would your philanthropic heart be if you had to pick?
So for me, the well raised was a big one for us. One of the things that I come from Panama, I think I mentioned that earlier. What people don't realize is that there is actually still today a water shortage in this world. It's absolutely crazy to me that people still struggle just to have clean water, which we completely take for granted. I will tell a very personal story that I know that what that looks like because I was one of those kids once. I remember having jugs of water next to us and you have to think through what that meant. And so I would tell you that right now, water is something that's really important to us at our firm. There's 2 things that we focus on is how do we help get wells built out throughout the world? And the second component is something that my wife is actually way more passionate about it. I'm all in on it though too, is we really try to really focus on organizations that have to do with basically being able to have children. And the reason for that is because we actually went through a really challenging 5-year stretch where we were trying to have children. We had fertility issues. And so between Raise Well, which is the water company that we do, we have a couple of different ones that we do with fertility. So that one, I can't speak to anyone specific in that arena, but I will tell you that if you can be part of any of those two causes, you can change lives. And for us, that's important. And I think my wife actually made an initiative. I think it was about seven months ago or so, that we will basically now 10% of everything that we do goes towards those charities. And that's been probably one of the most powerful things that she's got us doing.
Yeah, that's absolutely fantastic. And just to flip back to the question that I skipped over, we heard your superpower. Now let's hear the other side of the coin, Angel. What is your biggest failure, life or business, and what'd you learn from it?
I got to tell you.
I love that got a laugh.
Because I've had a few of those. When you've been in the military, ex-football and things, you think that you've gone through all the failures physically. But I will tell you this, man. The one failure that I thought was probably my biggest learn and takeaway in the commercial real estate space was my first deal. It was unbelievable how my first deal, I actually spent all this money and time and months doing all the things that you needed to do. And at the very last second, it was a deal that was not going to be a smart deal. What we found was that if we actually would have done that deal, we would have been probably bleeding somewhere around $15,000 a month. And we'd have been all in on the quicksand. We uncovered some serious information that was not helpful. And quite frankly, it was one of those that my partners and I was the first to pull. I just want to always tell them that. But it was one of those situations where I reminded them, like, at the end of the day, I don't mind losing my money. I hated it. I was really not a happy camper. That my first deal ever, I lost, I don't know, somewhere to the tune of like $75,000 or somewhere in that zone. And it wasn't a lot for some people. For me, that was a lot because it was my first deal. I just I got this all ready to go. But what we found in that situation is that if you do bad deals, as it begins, it shall go. So if you do a bad deal, it will continue to haunt you. And the most important part of that is the holy grail of what our jobs are. We got to protect the investors. We always do. And that's one of the things that I would tell you. My failure was that I didn't get out of a deal soon enough and I had to lose all that money. But the win and the takeaway is that there was a lot of learning in that deal, but it was definitely a fail.
Yeah, I hear you on the failure. That's definitely a win though in my book, because if man, you do a bad deal and like you said, it haunts you. I have a couple of those myself that I have lived with, and fortunately we've exited them. But it doesn't get better. If you see the writing on the wall and just, maybe we'll just power through it, it doesn't get better. So
we call that quicksand. All the people that think
quicksand.
You power through, you don't power through quicksand. I'm sorry.
You sink. That's it. You guys hear me say it till I'm blue in the face. The only way you get in trouble in real estate is you run out of time or you run out of money. You don't want a loan coming due when it's not supposed to, and you don't want to bleed out. And that's what a bad deal can do for you. So anyway, last question, Angel, and then I'll let you get back to your busy day of running Keystone Private Capital. But you guys have a free ebook, I think, free gift for the listeners. Tell me what that is, why it's important, and where we can find it.
Oh man, I appreciate you throwing it out there. We definitely have our ebook that is out there. How you find it is you go to www.keystoneprivatecapital.com and you can go ahead and just register for that and get that downloaded. The primary thing that we want to share is our journey of how value add investing in industrial, how it can be impactful, not only on basically like we talked about on the community at large, but also how you can help yourself and your family through those investments. And so we really try to talk about not only what it is and what the asset classes are, but exactly how you can get the most value for and meet some of your end game goals that you may have for your family.
I love that. And folks, that will be down in the show notes. Whatever you're watching or listening this on, just scroll down. It's right there for your clicking pleasure as always. Angel, thank you for being a bud and coming on the show today. I know we talked about this jokingly months ago, but I'm glad we finally did it. It was great to I learned a ton today. I don't know about the audience, but I learned a ton just not being an expert in multi-tenant industrial. So thank you for your leadership. Thank you for your service in making this country, I don't want to put a political plug in there, but improving our country via your investment thesis.
Hey, no, I appreciate that. And I can't believe we made this happen, but man, I'm grateful to you guys at QUATTRO Capital. You guys have been great people to be working with. So thanks for all what you do.
Folks, I hope you learned as much as I did today. That was a great conversation with Angel from Keystone Private Capital on multi-tenant industrial, the benefits, the risks, and which there weren't very many, and just how amazing this asset class is as an investment thesis. So check it out. Their website will be down in the show notes if you want to go learn more about them. I have met these guys personally on numerous occasions. Great guys. I'm actually considering doing some work with them via the QUATTRO family. We believe in this asset class. We're not experts in it, but just like you come to us to be experts in multifamily, we go to them to be experts in multi-tenant industrial. So without further ado, this has been another episode of the Real Estate Runway podcast. Until next time, over and out, friends.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team QUATTRO can help you at thequattroway.com. Until next time, this is the Real Estate Runway podcast.